You were listening to chartingwealth.com for Wednesday, the 16th of December, 2015, as we continue to roll on and watch this year pass us by. Please do be aware that we will be taking our vacation hiatus starting on Friday. That is this Friday. What would that be? The 18th. And we will be back after Christmas. So that is where we are. As we jump into the day, I'm showing for the people watching on video sort of where our charts have come over the last year. And where are we as we jump into the day? Well, our two-day chart shows us that we are somewhere in the middle of the down two-day candle that started forming on the 14th of December. What is this? Where does this put us? Well, we're pretty much a spinning top right now, a green spinning top with a little bit of up movement as far as price goes. However, when you look at the MACD, there really isn't much of a convergence that is coming together happening. In fact, the derivative oscillator's gotten bigger and the MACD is continuing to move apart. And when we say that, we're comparing a blue signal line with the exponential moving average line. And actually the red line is our signal line, the blue line is our MACD, moving average convergence divergence. Crossed over going down back on the second. At about the same time, when we go and look at the 4-hour chart, brighten up our screen a little bit, you can see that the 4-hour chart started moving down around the same time on the second, which is rare for both the short and the large chart to roll over at the same time. They did, of course. That was prescient in telling us that we were going to have the big down move that we have had over the last several days. That appeared to stop yesterday afternoon, at least on the short chart, and start moving up. There was a great deal of up movement in the morning and in the afternoon for the day. I say a great deal. It was 1% for the total market. Still haven't crossed over going up yet on the 4-hour chart, so we still are in confirmed down moves on the large chart and the short chart. What caused the markets to move up? Allegedly, a rebound in oil prices, waiting for the Fed to increase by 0.25% their rate. So we shall continue to see just how, if indeed that plays out at all. Now, when we go and we look at SPY, what do we see? Well, that is the Standard & Poor 500. What do we see going on there? Well, very similar to the total market. Over the last day, we've got an up move of a spinning top in the center of the down move candle for the prior 2 days. When I say the last day, we've just started forming the new candle. That is the new candle that's going to be for the 16th, where it was on the 14th, was significant down move on that 2-day candle, still in a confirmed move. Total chart also, the SPY, Standard & Poor 500, crossed over going down about the same time that the total market did. Also, we go and we look at our 4-hour chart. We see we had a lot of up move in the afternoon, and then a bit of a down move in the afternoon after an up move, in the morning. Still haven't crossed over going up yet. We have had the derivative oscillator lose almost all of its steam, so we shall wait to see what we see in the morning as the markets open and start moving throughout Wednesday. What we have right now, though, of course, is we're still in a confirmed down move on both the short and the long chart when it comes to the S&P 500. Now let's move back to our 2-day chart, and we shall go finally. Oh, and just for the record, SPY was up 1.08% for the day, just a little more than the total market. Now the Qs, which is the NASDAQ 100, we again see down moves on the 2-day candle starting around the 10th and then again on the 14th, and the new candle started forming the first day of that is for the 15th, and we see again a spinning top with a little bit of an up move in about the center of where the market moved down on Monday. And what do we see happening? Well, we see a 0.16 increase in the market for the day, and that's 0.61, little dyslexic there, 0.61 increase, so a little over 0.5%. Now let's look at what is going on the 4-hour chart, and we see that again, still no confirmed up move yet, hasn't crossed over going up yet on the 4-hour chart, and the MACD moved over going down back around the 3rd on the short chart. So we are still both confirmed down moves on the big and the short chart, although the short chart may be changing that. We'll just have to see. It topped out about right where it did at lunchtime, though, over the course of the day. Didn't continue to rocket up in the afternoon. So we'll continue to watch. We will see what we will see. The fact that we don't have a solid box, red or green, is telling us some things. If you want to see continued down movement, you would want to see solid red candles. So again, the candles tell us a few things with our Henki Ashi type of candle mix that we use. And please, again, if you don't know any of these terms we're talking about, I want to encourage you to go to our website. Got lots of good studying there. Or if you go to our website and you sign up for our free email newsletter, we'll send you this review every day, plus our weekly review and forecast. Plus, you'll get links to how to read a stock chart video and our charting layout. All you got to do is go sign up at chartingwealth.com. Then you'll know what's going on. Okay, lastly, we're going to go back to our 2-day chart, and we're going to take a glance at gold. What's gold doing? Well, gold has still not crossed over going up on the short chart. I'm sorry, the long chart, still in a confirmed down move, although it's awfully close. Derivative oscillator has switched over. I'm referring to the MACD, the moving average convergence divergence indicator. Again, we're looking like we have a floor here somewhere around the $100.50 mark on gold, on GLD. And let's look at our 4-hour chart and see what it tells us. Now remember, talked about how wonderful in the past our 4-hour chart had been. Well, it crossed over going down on the 14th, and of course we've continued to see down movement on the 15th. See how things go on into the 16th. There was a little bit of an up move in the afternoon. Technically, gold was down 0.27% for the day. Derivative oscillators going down, and again the MACD rotated over from the top going down, so continue to watch for more down moves. However, this whole thing with the floor allegedly being reached in oil and the markets booming up, that may have an effect on on gold, and gold may, continue to move down as the markets maybe recover, maybe don't. Let's just continue to watch. A lot of times gold will work inverse to what's going on in the market. So let's continue to pay attention. Hopefully our 4-hour chart is going to get back to really telling us what's going on in gold, as it worked so well before the 12th of November when it started lying to us. That is where we are as we end the day on Tuesday and go into Wednesday, the 16th of December. Thank you so much for joining us. We appreciate you being with us every day. And don't forget, sign up for our newsletter, follow us on Facebook, Twitter, YouTube, Instagram. We're there for you, and we love to hear from you, and we love to help. See that good training online, sign up for our newsletter, and get that charting layout and the link to our How to Read a Stock Chart video. Thanks so much. God bless. Hope you are having a great and festive holiday season.